Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Selective Insurance Group INC quarterly report. Selective Insurance Group Inc. provides a wide range of insurance products and services to various clients. The company's offerings include casualty insurance for employee injuries and third-party, damages property insurance for real property, personal property, and earnings loss flood insurance products investments in, plus fixed income investments, plus commercial mortgage loans, plus equity securities, plus short-term investments, plus alternative investments. These services are offered to businesses, nonprofit organizations, local government agencies, and individuals through independent retail agents and wholesale general agents. Selective Insurance Group Inc.'s stock price drop. A year of disappointing financial results and analyst downgrades in the past year, Selective Insurance Group Inc.'s stock price has plummeted by over 14% due to a series of disappointing financial results and analyst downgrades. The most significant contributor to this decline was the company's Q2 2025 earnings miss, where it reported adjusted earnings of $1.31 per share, falling short of analyst expectations. This was largely attributed to social inflation, which negatively impacted casualty reserves from prior years. The combined ratio, a key indicator of an insurer's financial health, came in at 100.2%, indicating that the company paid out more in claims and expenses than it collected in premiums. The Q3 2025 earnings miss further exacerbated the decline, with adjusted earnings of $1.75 per share below consensus estimates. Analyst downgrades also played a significant role in the stock's decline, with several lowering their price targets for SIGI. The overall decline from its 52-week high of $102.09 to $76.40 on October 23, 2025, marked a 25.2% decrease, surpassing the specified percentage threshold. Net income and profit margins experienced significant fluctuations in 2025 compared to 2024. On one hand, net income increased by 25.6% quarter-over-quarter, (QoQ), and a staggering 179.3% year-over-year, (YoY). This growth was largely driven by revenue expansion, which rose by 9.4% QoQ and 11% YoY. However, profit margins did not uniformly improve. While the net income margin increased to 10.3%, some segments saw a decline in profit margins. For instance, total insurance operations experienced an improvement of 7.6%, while other segments witnessed a worsening by 0.4%. The disparity in profit margin changes can be attributed to varying expense growth rates. Total expenses grew at a faster rate than revenue, leading to decreased profit margins in certain areas. Nevertheless, the overall net income and profit margins showed significant improvements, indicating a positive trend for the company's financial performance. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. As stated in the report, operating cash flow is positive for both years, demonstrating a stable trend. Furthermore, the net cash provided by operating activities has increased from $767.7 million to $856.8 million between 2024 and 2025. Indicating an improvement in the company's ability to generate cash from its core operations. This positive operating cash flow is a key indicator of the company's financial health and stability. The company's debt level has increased significantly over the past year. According to financial summaries, long-term debt rose from $489,694 in 2024 to $904,170 in 2025. While total debt jumped from $507,938 to $902,317. This substantial increase in debt is likely a contributing factor to the rise in interest expenses. Interest expenses have also seen a notable increase, rising from $7,250 in 2024 to $13,253 in 2025 for the year-to-date period. The 9-month total of $36,082 in 2025 is significantly higher than the $21,633 recorded in 2024. This suggests that the company's increased debt level has led to a substantial increase in interest expenses. Management's outlook on company strategy. The company is focused on executing a strategy that balances risk management with long-term growth. In the short term, the company aims to improve underwriting margins by achieving renewal pure price increases above expected loss trends and deploying granular underwriting refinements. For the long term, strategies for profitable growth include diversifying insurance segments' mix of business. The company is actively managing investments to maximize yield while minimizing interest rate risk. Management aims to maintain liquid investments that are at least twice its expected annual net cash outflow needs. The company targets inorganic growth opportunities and debt retirement through the use of its investment portfolio. Financial guidance for 2025 includes a GAAP combined ratio between 97% and 98%, after-tax net investment income of $420 million, an overall effective tax rate of approximately 21.5%, and weighted average shares of 61.1 million on a fully diluted basis. Management is continually monitoring cash requirements and maintaining capital metrics to support financial strength. The company's financial activities include several key transactions. Notably, there were no acquisitions reported in the summary. However, the issuance of $5.9 billion senior notes in the first quarter of 2025 generated significant net proceeds. In terms of divestitures, the company recorded a decrease of $216.9 million in federal and state pools as of September 30, 2025. Additionally, there were losses on securities with an intent to sell totaling $759,000 in the 9 months ended 2024, as well as other realized gains, losses, on disposals amounting to $602,000 during the same period. The company has demonstrated its commitment to returning value to shareholders through two key initiatives, dividend payments and share buybacks. In terms of dividends, the company has paid out $2,300 in the current quarter and $6,900 year-to-date to preferred stockholders. Additionally, it has also made dividend payments to common stockholders, albeit with a negative amount of -$23,179 for 2025 and -$69,863 for 9 months in 2025. Furthermore, the company has also engaged in share buybacks, repurchasing 698,312 shares for $55.6 million in the 9 months of 2025 through its share repurchase authorization. This indicates that the company is actively working to reduce its outstanding share count and return value to shareholders. That concludes the financial summary for Selective Insurance Group Inc. Feel free to comment below, and I will be happy to answer them when possible.